There we go. We want to be respectful of everybody's time. We want to make this go till about 3:30. So just to give everybody a quick agenda of what the plan is, just give you a quick overview on who we are, who UPC is, what our strategy is within the fund. Most of you already know. And then, why you should work with us. We've got a spreadsheet to show, depending on the dollar amount that you bring to the table, right? Because that's the purpose of this, is you guys coming in, working with us, bringing money to our fund. Collectively, it's our fund, and what that would look like, and then kind of the action steps moving forward from there. So really quickly, Joe Render Connect. I'm up here in Utah. I've been doing multifamily for the last 3-5 years. Have a background in property management and some construction, but most of it's in asset management, property management, and really love the operations of the property. And I'm excited about this opportunity to work with people like Michael and Brandon and our other partner, Nikita, who couldn't make it on this call. We've got some fantastic opportunities coming up, which we'll talk about next, as part of what our strategy is with our operational partners. So, Michael, do you want to tell a little bit about you and go from there?
Sure. Great to be here, guys. Feels good to another opportunity to speak to some more entrepreneurs who are interested in raising some capital with us. A little about myself. I've mostly been in the single family fix and flip world for going on about 8 years. Worked with Joe, and he's coached me on some multifamily underwriting processes. He's extremely talented in what he does, and he's worked for some very reputable companies as well. So his reputation speaks for himself in that. He's trained me. And as we did over the past few years, which naturally happens when you're just out there and you're an action taker, you begin to get more opportunities, and many more real estate opportunities were coming to us. We met people like Nikita, who works for a company called Investment Fund Secrets, which teaches people how to start and raise funds. And I think they're up around, I want to say 12 or $13 billion total, that as a company, they've trained other people how to raise funds. So they're very good at what they do. Our partner Nikita is very skilled at what he does too. So, and then Brandon, very skilled salesman as well. He's always been wanting to invest into the real estate world. I'll let him tell more about himself. All four of us came together knowing that we can do this. We can collectively put our skills together and raise this fund. And truly what the strength of Upgrade Partners Capital is our operators that we work with. One's in the DFW area, one's in the Denver area. That's where they're located physically and live, but they have thousands of units across our country in different markets, between Oklahoma City, the Nashville area, Kansas City, and we're looking into a 231 unit in Lafayette currently right now. We'll talk about that project later on with some more specific details. So that's really where Upgrade Partners Capital is going to be an asset for anyone who invests into us. So whether it's you or people that you introduce to us, know that you have a team, a core team that's scouring deals from highly vetted operators who are going to be the true strength of us, and you'll be able to leverage not only us and our skills, but our operators are out there too. So that's a little about me. I'll kick it over to Brandon now.
Yeah. Thanks, Michael. So Snyder and Lance, obviously we all come from the same background of, high income W-2 employees, and it's a very fortunate place to be. But, when it comes to investing, it's like, I've been wanting to get into real estate for, since I was 25 years old. So, almost 15 years. And the hard part is how do you approach the market? And you can get into the flip world or the single family rentals and that sort of stuff. And I did that back in the day. And, but just as I got educated, it was like, I knew I wanted to be in the multifamily commercial space. And the more and more research that you do, it's like, damn, this is a team sport. You really have to do this with a group of individuals to be able to take down projects that are, big in scale. The bigger the project, the less risk it has versus, a smaller project that you tackle yourself. It's it's got way more labor attached to it, maybe way more, construction, all that sort of stuff. So met Joe at Upgrade. He asked me some really pointed questions, and it led me to investing with him into a fund actually in Texas. And Snyder's came along for that one too, with Key Cities, and we started getting our dividend checks. It was like, damn, this is just as advertised. And then it's like kind of opens up, well, how did they do it? And so when we dug in and looked at Key City's business model, they're the fundraisers, and then they hired operators. So when I was talking with Joe, I found out one of the operators that we're working with, his name's Patrick Duffy. We've got other operators as well, but Patrick is the key operator on the Key Cities fund that we invested into that's absolutely crushing it. And when you talk to Patrick and you interact with him, you're like, holy shit, this guy's a force to be reckoned with. He's absolutely a professional in this business. He knows what he's doing. I feel comfortable, one, like giving him money, as an investment, but even more importantly is I feel comfortable telling my friends, family, other people that this guy's a credible person. He's not going to lose money. He's going to, actually multiply money. And so that's where we came to, and we decided, let's put this fund together and go tackle some big projects and multiply some money and get into the game. And what's been pretty cool about this whole thing is the amount of deal flow that we're getting, as a first time fund, and the size and scope of these deals and the cash on cash returns that we're seeing, and the experience that, it's collectively come to this is almost $1 billion just between two operators and what they put together. So that's kind of my story and, my lens on it for Snyder and for Lance. Like, how do you guys play a role in this? There's a couple different ways, and we'll get into like the nuances and the details, but there's a couple ways. You can come in as an LP and invest and multiply money, and we'll show you what the returns look like. It's very, very solid. It's better than what you would get in the stock market. It's safer than what you would get in the stock market. It has better tax advantages than what you would get, if you went into most alternative investments. But there's another way to come in and make money on this whole thing too. In these funds, they typically reserve what's called co-GP fundraising space. So we have allotted in the fund basically places where, like, if you helped and brought in other investors, you would get a portion of the GP. And it's significant money. It's not like, oh, here's $1,500, great job. It turns into real money if you help raise and bring in other investors that want to multiply their money and feel good about what they're doing. So wouldn't invite you to the call if I wasn't confident that, one, we were going to make money, right? That's like check the box number one. I don't want to jeopardize my reputation in the world that we live in, in capital equipment and in our small InMode world. Like, I'm not going to, bring sales directors, my peers, to some YO idea that is going to jeopardize that. So that's number one. Number two, I'm so confident in the business model that we've got with our operators that when we do deploy capital, it's coming back and it's multiplying. And I just want to really put that on the table, because if we were going to ask you to come bring friends and family and other people that have, hundreds of thousands of dollars to invest, you're going to have that same confidence. And so that's my perspective on it. We'll get into the details, but that's kind of what I wanted my 2 cents to be.
Awesome. Yeah, and to echo Brandon's statements, guys, not only do we plan on verbally putting ourselves out there right now, and for those who have the relationship with Brandon, for those who have a relationship with Joe, this is being recorded. So some of my people who are going to see this as well, obviously we're here in front of you telling that we're confident in this. We're going to provide that in numbers too. We're going to have a data folder for all of our investors to check out, which is going to have bios of our operators, their past pro formas, future pro formas, foresights of the market. You're going to see background checks of myself and all of our partners who are involved in this. and also people that we're going to be potentially working with. And I'll say potentially just because the deals aren't under contract yet. But, we're speaking with high players within the market right now who have a lot of deals out there. And once we start working with these people, it's going to open up a floodgates for Upgrade Partners Capital and whoever invests with us too. So again, just like Brandon, I feel very confident in our course team, our operators that we work with, and any opportunities that we're going to bring to you. Know that it's going to be vetted by the operators and their team. And also, Joe has a very highly experienced underwriting background, along with an underwriting property management team that's going to be double vetting for our firm too.
Yes, sir. Yep, we want to make sure that we maximize the returns for our partners and our investors. So, and as we're going through this, guys, if any of you have questions, or I know James, you said you had to leave early. If you have questions, stick them in the chat. That way, the questions, right? People are going to be seeing this recording, and they can't necessarily ask questions because they're not live. So ask any questions you have. We'll hit them at the end, and then we'll send the recording out to everybody. So where we wanted to go from here is give you a quick high level on the deals that we're buying, how we feel like they're going to work with the current market conditions, and then how we do this. Okay. So right now we're looking at deals that are 1980s vintage and newer in growth markets. So Utah, Denver area, we're going where our operators are and where we are. So Dallas, Denver, Salt Lake. Then we've got some properties we're looking at, like you said, in Lafayette, Louisiana, that we're checking the market out on right now. But where's the other markets? Oklahoma, and Tennessee are some of the other markets that we're in right now based on our operators. The cool thing about the operators that we're working on, like Michael said and Brandon said, is that they are highly experienced. Patrick Duffy himself owns over 4,500 units, and our other operator, Ryan Lawless, owns about 2,500 units, I believe. And so the cool thing about that is we're connecting with these guys that have access to deals. To tell you really quickly about Patrick's style, all of his deals are on market. And so on market with operational upside, where he will go in and within 2 to 3 years will renovate the property, do a light cosmetic update on it, and be able to sell within the first 2 to 3 years. With an asset like that, there may not be as much cash flow from the beginning, but there's going to be much higher upside on the back end. Okay. And then with our operator, Ryan Lawless.
Hold on, Joe.
Yeah, go ahead.
Sorry, Joe, just to interject, because I want to give more and for Patrick. And this is something you'll be able to visually see once we update our data folder as well. Patrick's has a contract with a bank called Commerce. They're an institutional lender, and they're going to be lending up to 90% of the purchase price for all of Patrick's deals going forward. I think the deal's around 300 million that he's in contract with them. So know that 90% of all the funding is going to be underwritten very, very meticulously by this bank, right? So that should give, as our fund, it gives us a lot of confidence of the deals that he's going to be getting, because a bank is going to be giving him 90% of lending. We're just having to come to the table with 10%. So we feel very confident that their underwriting process is going to be very well done. Patrick's and ours, that's a 3-layer system that you'll be able to get before you even see the deal.
Yeah, thank you for mentioning that, Michael. It's very, very important. We're hedging our risk like crazy with that strategy. And then with Ryan Lawless, he's in Denver, Oklahoma, Kansas City, owns about 2,500 units. Most, if not all, of his deals are off-market deals where we're getting a better premium, price on it. Not premium, but just better pricing overall. And we'll have more cash flow and a good return off the back end. So we're really offering our investors best of both worlds. Off-market deals with more constant cash flow, with on-market deals with much higher upside on the back end. Yeah. Anything else, Michael, you want to say about Ryan? You've got more of the personal connection with him.
I would say Ryan is very talented at what he does in terms of his asset management. I think that's where he specializes in. To be an off-market multifamily acquisition person, you really need to have that tenacity to run that kind of thing. It's not to say that Patrick isn't what he's doing. It's just on market, it's a different beast versus off market. And then once he actually runs the asset management, he is, as Joe, even I remember you said this, his underwriting tools is very interesting. He does a very interesting deep dive, but it's for a reason. Everything has his purpose with what he does. So he just had a call with a gentleman named Tim Bratz. I don't know if anyone on this call knows Tim Bratz, a very successful multifamily investor throughout our country. Brandon's actually in his mastermind. And I know from what Ryan and Tim were able to communicate at that level, it just gave myself, Brandon, and Joe, and Nikita, our partner, more confidence in Ryan because of the level they were able to communicate, and also mutual relationships that they have too in the lending world. When we see those things begin to overlap, that gives us confidence, like, all right, these gentlemen are already kind of speaking the same language. They know the same people. So again, just more confidence that we can give to anyone who invests in us too, about Ryan and about Patrick. And we'll say it again, guys, these are the strengths of UPC's funds, these two operators.
Yep. And we may have another operator out of Salt Lake that I have personally done business with that are very, very good operators as well. So we'll talk about them once they come on board. But does anybody have any questions up till now? Okay, if not, we will move on
We'll
to
dive into the co-GP structure, right?
Yep. So to tell you guys quickly, okay, go ahead, Christine, come off mute and you can ask your question.
Okay, so I know that there's a lot of different ways to learn underwriting. And I get like the general parameters of IRR and like what's a good value add. And I know like A, B, C, D class, like I get the general,
Right.
but how do you recommend people who are coming in as wanting to be potential GPs? And basically, like you said, if you raise capital and you bring in these investors, you could get a potential GP partnership. I want to be fully informed. I want to know like really how to underwrite, and you guys have a 3-part system. So how would you recommend people who are still newish, novice to underwriting, to get educated on that?
Yeah, and Christine, like I'm happy to jump on a call and like run you through like our underwriting models and give you an idea of how it works. Because I think like underwriting is important. And being able to understand them, because like I know Brandon's like, Joe, you need to teach me how to do this more so that I understand the full scale. And I'm happy to do so on a high level, right? Cash on cash and IRR work hand in hand, right? So with our fund, we're shooting for like a 6 to 8% cash on cash and a high teens IRR. And just what that means is the cash on cash is, on average, what we're going to receive every single year on your investment. And then the IRR is going to be on the overall cash flows plus the return off of the back end. And so for any of you who are wanting to learn how to understand underwriting better, at least from a high level, so that you can speak it to your investors, I'm happy to do like another call to review like a deal or two that we have done or that we are currently underwriting to help you. Because I agree, Christine, like if you're going to sell this, you want to be able to understand the intricacies, there we go, of the deal to be able to speak to it. And I'm happy to do so.
How about we take it one step further, Joe? And in our folder, we have a question and answers, a Q&A document that we've created. So we'll put some Q&As for you guys in there. What's an IRR? What's a cash on cash? And how you can sell this to anyone that you're speaking to. Like, hey, this is in a growth market. They plan to raise rents X amount of dollars. There's this amount of business coming in over the next 2 to 3 years. And this is what we've seen. So we can put together a little script and send with like 5 bullet points. This is where that saying TMI, too much information, almost comes in. You almost just want to give the full bullet points. Hey, what are you currently getting right now in your money? Like with what you're investing in with your Roth IRA or 401k or in the stock market, this is what this fund can get you. And this is why an IRR, and this is why they believe actually the IRR is going to grow over the next 2-3 years because of jobs, because what they can do with capital expenditures, what they can do with raising rents, things like that. So in the Q&A, we'll give some questions and then we'll give 5 to 6, I would say, bullet points for you guys to kind of touch on too. And then, yeah, if you want to take advantage of the call with Joe too, definitely do that as well.
Yep, for sure. And on the side of that too, the 3 of us, and I know Nikita would be on the same page with this too. If you guys have investors and want to kind of shadow us speaking to your investors, how we would any other investor, explaining it, like we're happy to do that as well. And talk to your investors, and then you see how we speak to them with the details of our deal and of our fund, and then that will give you more confidence as well in what to say. So
yeah, this is a team, like Brandon said earlier, it's a team game for sure.
For sure. Should we look at some numbers?
Yeah, let's pull up that visual.
All right. So, so Nikita and I worked on this morning. So can everybody see this, or should I enlarge it a little bit? There we go.
Better.
Okay. Just gonna put you right here. Okay. So our goal is to raise $25 million by September 1st is the goal. Our preferred return, I'll write this, that we're offering investors is a 6% return, a 6% preferred return, and then a profit split of 80-20. So really quick, what these mean. So preferred return is the investor is getting paid before anybody else, right? So if you invest 100K, you're going to get 6% of that before like we get paid a dime, okay, on the profit split. And then the 80-20 say that at the end of the day, there's $10,000 in net income. So that's income minus expenses minus debt service. Say there's $10,000. The investors will get 80% of that. So they will split the $8,000 between them, right? So does that make sense on a high level, at least what the 6-pref and 80-20 split is, right? So that we can all understand that. It's important for these calculations that I'm about to show. So we got one. Okay, good. Just keep the chat open. All right. So with this, our target cash on cash is between that 6 and 8%, with the target IRR of 18%. Okay, and so how this works is of the 25 million, the GP team or the UPC fund team, which is Brandon, Michael, and I, will be taking 2% of the total money raised, which will go to like our legal fees, our accounting costs, which, believe it or not, are fairly high. So that's kind of just like taking care of our overhead. Where what matters to you guys is with the GP, we have allotted 30% to capital raising of the total GP within our fund. Okay. And so that means that you would be able to get 3.6% of the overall GP allotment. So based on an IRR of 18% with $25 million, that means that we have $900,000 to be able to distribute to our co-GP partners. Okay. Let's see. So what that would mean is if you came in and you helped us raise $10 million, okay, you would get 40% of the allotted amount. So 40% of the 30% is like what, 12? Is that 12%? Yeah, you'd get 12% of the total money going to investors. And I should say that not only will you get the 3.6%, but it's also taking into account the profit split of the 80-20 as well. So you would share in the 20% profit that is coming to the UPC fund in general. So just as an example, you bring $10 million and say we hit those numbers that we've got targeted. Did you have a question, Marcus?
Sorry about that. Accident and mute.
Oh, you're good, man. Glad to have you on.
Yeah, glad to be here. This is interesting stuff.
Yes, sir. So essentially, throughout the years that we'll be operating this, you will receive a total of $540,000, which is essentially 5.4% of every dollar that you raise. Now, let me tell you why this is significant. And I don't know if Brandon knows this, but when I was working with Key City Capital, who is the other fund that I helped to raise some money for with, Brandon and Matt, they're like, you help us raise money and say you bring us 3 good investors, we'll give you a 3-night stay at one of our Airbnbs. And at that time, I was like, that's pretty cool. But there was no like monetary compensation, right? What you guys get by helping us bring money is like legit equity in the upside of our fund. Like say this target IRR goes to 20%, right? You now bump up about $60,000 more per year that you could receive.
And I think it's worth noting for everybody to understand too, because if this was my first time looking at this, I'd be like, am I investing this money or is this people that I bring? This is for people that you link us up with. They're like, hey, this is my brother-in-law. He's looking to invest 250 grand. That would go towards this. The other thing that I would say is our target IRR is only a target. We're looking to outperform that IRR. And in the fund world, what I've learned is you are always very conservative on what you advertise. That's never really where you land. At least from what I've seen is that usually there's overperformance in all of these funds. So we're hoping to get way higher return than an 18%, annual IRR. So that I want everyone to understand that. Joe, what I think could be helpful is $10 million raise. Can we bump that to like $500,000 and see what the numbers look like for
Yeah.
people? Cool.
Yeah. So something a little bit more obtainable, right?
Yeah. So this is like 30 grand you're getting if a couple of buddies invest $500,000. So that's kind of how that I would look at that if I was, someone on this call. Is there a way to show them if they were an LP on the deal, what it would look like at year 5 on the 18% target IRR at like a 250 investment?
You'll have to give me just a minute, see if I can pull that calculator up. I don't
Okay.
have it handy,
Sorry,
but I
throw that on you.
probably, no problem. Like I can still find it. But it may need to wait for our next call
Right.
or we can have a call privately.
Yeah. I mean, we're essentially looking at on the 3-year hold, almost a 2x on the multiple of money. So invest, in the minimum, invest 100, 3 years later, you get 100 back. And that's how you kind of calculate the IRR. The whole way you're getting cash flow and dividend checks every quarter. But the other big part to this whole equation is that you're the limited partners and the GP are catching the depreciation on the property itself. So you're getting a K1 that shows like 20 cents on the dollar on what you earn, which to me, as a W-2 guy who gets crushed and absolutely smashed every year in taxes, that's like huge to me. I every new dollar I make from my W-2 job is going into cash flow producing assets that get tax shield advantages. So like that's kind of how I look at this. So if you're talking to other big W-2 earners, they got capital, they want to really diversify. The stock market's absolutely punished them this year. They're, scared of where they're going to put their future dollars. They don't want to yield or hoard, hundreds of thousands of dollars or millions in cash and just sit on it. Obviously we all know with inflation, that sitting on cash is like not the smartest thing to do. So deploying it into a fund it's hedged against inflation, that gets these types of returns, that has a tax shield on it. That's the overall big picture that I would be talking to people about. And the appetite for this type of product is enormous. Literally everyone I talk to that's a big W-2 earner is like, I'm in. I want to freaking get some good returns and shelter my tax my tax advantages. So that's what I would say. That's more to my InMode guys. I'm passionate about it. It's definitely a home run. If investors want to have more details and more meat on substance on like, well, what exactly am I buying and how does it work? We will do one-off calls with the operators. I think the last webinar, if anybody actually watched it and got to see Patrick do his thing, it's like, oh, there we go. I get it now. This is where the money's going. So I would just kind of sum that up and how I would view it and how I would position it to someone like that. Obviously, there's business owners that have tons of cash. There's other real estate people that are cashing out of properties right now, left and right, hedging, and they need to put places to put their money. They're also great people to be talking to about investing into the fund. So.
Yeah. And another tool to follow up, and because guys, let's face it, it's 2022. We live in a world of technology, right? That help us out. So we've hired a firm called NAV Consulting. And what NAV Consulting do is an online software platform that allows us to track all the money invested, all the funds, and there'll be a platform where investors can see what the returns will be, how they're going to be distributed. And then coach GPs can see these things as well with them. And then you'll get to see that in the data folder as well. So again, more tools for you guys to jump into. And then we'll be able to share with you guys directly. This is what the money's being put into. Of course, we got our fund administration team, legal team too. So all of the money, since this is a 506, excuse me, I can talk, 506C, all the money is going to be very well organized, handled in legal hands. It's not myself, Brandon, Joe, and Nikita just putting it in our Chase bank account or anything like that. So.
Yep.
Any questions about what you guys just saw? I mean, like we did a very high level. At the same time, what Joe's calculator does do is allow you to basically see this is how money can be allocated. So if you were to help us out and raise money, this is how we can do it for you guys.
Go ahead. Yeah, if you have a question, just come off the mute.
Okay, cool. So I've been in a lot of different sales positions and I love scripts. I love being able to have like a simple intro message that I can kind of customize to each person I'm reaching out to. Would you recommend I don't know, I have talked to Joe a couple times about like seeing like a case study of a type of project, because yeah, you can hear these numbers and you can get the idea of the criteria, your buying criteria, but people who are not as well accustomed to the terms of all that, they like visuals. I would like visuals even with the terms that I'm learning in the real estate investment world. Is there like a case study or quick intro video that like shows an actual property that's someone's had under their portfolio before that we can say, hey, not only is this the team that you would be having take care of the investments, this is the type of investment you could potentially have brought to you. That
So-
way I can start to warm my leaves.
What
Love
we could
that.
do is Joe and myself and Brandon as well, we could take a past pro forma of a deal and then just do a screen recording like a Loom or a Zoom or something like that and just kind of walk through and say, hey, this is the numbers that happened. This is how they were able to raise rents, things like that. Just do a very high level underwriting as we walk through. My encouragement too, it seems like you're a learner, which I love. You know, you can YouTube, there's plenty of content out there. Myself and Joe used to YouTube underwriting people like David Tupin was a gentleman we used to learn from online. He's got a good underwriting class. A lot of people put free content on YouTube, just get followers too. We're happy to do it too, but there's other people you can learn from as well, different styles.
Yeah, so what you've said at the beginning is definitely what I was alluding to, is like your quick video, 3 to 5 minutes, high level, that is someone who's, like you were saying, the ideal W-2 person who's like, I don't want to sit there and learn all this stuff with real estate. I just want you guys to do it for me, you know, like those passive limited partners.
Yeah.
'Cause I have a lot of contacts that way. And in fact, my business partner, my father, has a ton of political contacts, like 1,000 plus. And it's like, we haven't even started to warm them up because we're like, what are we going to talk to them about? So yeah, if we get little case studies, little videos, and can include them in our newsletter, can send like little emails, then when someone's interested, they'll bite and they'll contact us, you know, and we'll have like a warm.
I still think in the beginning, it's best to keep it very big picture.
Yeah, exactly.
The TMI is a real thing that I found out throughout my career. If someone's not even understanding what exactly a fund can do for them, giving them the deep dive on numbers sometimes can be TMI. So we do have some, 1 minute, 2 minute videos about us, about our fund, our pitch deck, our 1-page interview as well. And then if someone wants to do a follow-up call with us, we can send them the 3 to 5 minute video first, and then also do a call in person. I think calls in person are usually the best way as well. Yeah, but at the end of the day, that's what a fund is here for, guys. A fund is here to help, so you guys don't have to do the underwriting. You guys don't have to worry about investing or looking at real estate properties or worrying about rent control or any of that good stuff that real estate comes with, right? The fund will take care of the collecting of the money, raising of the capital, and making sure that it's distributed and deployed ethically, ecologically, and legally, of course, and that our operators are doing those things. So I think the best thing, if I was in your, and I used to do this as well for, just so you know, my uncle has been in the real estate world for about 35 years. He's a fund manager too. I used to do this, helping him out. He was like, just get me on a call with them, right? If you find people with money, just get me on a call with them. Let me speak to them. I think that's the best thing for you guys too. No bullet point talking points, like 3 to 5 bullet points, and we'll put a script together in a folder for you. And then, just do a call with us, and and you can shadow us too. And the more you hear us talk the language, the better you'll learn it.
Yep, very good. So I know we're a bit over time, so essentially action plan moving forward. June 8th is our next investor webinar for anybody who would be interested in investing with us. Michael, did we set that at 3 Mountain or was that 5 Mountain?
I think it's 5 p.m. Eastern Standard Time, right, Brandon?
Correct.
Okay,
Yep,
so
3
same
p.m.
time as this.
Yep.
So what you guys can do is, start building for that investor webinar. You should have my email, Michael's and Brandon's. I sent in the email last night or I guess it was this morning, in our investor deck has all of our contact information. We're willing to give it to you on here as well. Get us on a call like Michael said, with your investors, or invite them. We can send a calendar invite. What we'll also do is we're just about done with the investor deal room, and we will send you and give you access to that as well. And really, you can give your investors access to that right now if you want to, once we give you access, so then they can come to our interview or our webinar prepared, and then utilize us. We're spending a lot of time and building this, so we'd love to jump on more calls with you and your investors and build this together with all of you. So
And on June 8th, I would expect, we'll push for it, that we get both of our operators, Patrick Duffy and Ryan Loss, on both of the call right there. We
Yeah.
know that we're personally working with Patrick on one deal, on Ryan with one deal right now that we're helping him hopefully close within the next week. And then Ryan's got some other deals to talk about as well. Patrick has, I believe, a couple of deals that he's working on too, Joe, down in, where is he at?
Yeah.
Nashville, right?
Yeah, yep, in Tennessee, it's an MSA of Nashville. So yep, it's in that area.
So both of those guys will be on there. They'll be explaining more, again, more history about them and more specific deals. So another call that we definitely recommend you guys join us. And if you have people who want to join us too, that's another great call to be in, along with the investor deal room, which is our data folder that we're going to share with you guys. Yeah, we appreciate you, everyone who jumped on, who everyone's watching this recording. This is what Brandon really said. This is a team effort, and it's how everybody wins together.
Is there any last questions?
Appreciate everybody getting on.
Yep.
Christine, those are some really good
guys. Thanks for
suggestions.
running through all that.
Yeah.
Yeah,
Thanks,
thanks for
brother.
coming, Matt. Marcus, do you have anything? I know you come from the fund world as well. We met in Vegas.
Yeah, no, absolutely. I just had a quick question regarding placements. What is going to be, I don't know if I recall seeing it on the pitch deck, but your minimal placements for investors coming in and, wanting to take an LP spot in your deals.
Yeah, our minimum right now is 50K.
Okay.
So makes it pretty easy for people to join even on a lower level.
Yeah, got it. Okay, that works. That's the only question I had.
Okay. Thanks, Marcus.
You got it. Actually, I have one more. In terms of once they do have placements in your deals, what can they expect in terms of, I would say investor reporting calls? Are you doing, monthly or quarterly reporting? And how often are you expecting, capital events or distributions?
Yeah, both will be, as of right now, quarterly.
Okay.
Is what we've decided to do, investor calls and what I've been doing, and I think we'll continue to do, is like a YouTube channel.
Yeah.
On some of my past properties, YouTube channel with like updates through the, video. And then we'll send out a newsletter with distributions quarterly.
Awesome. Great.
Yeah, great questions. Okay, guys. And Christine, if there's not any questions, we'll jump off and please reach out to us. I will send another email to all of you with this recording, and we'll make sure to put Nikita's, Brandon's, and Michael's and I's information in there. Like I said, please leverage us. We'd love to jump on the call with your friends and family, coworkers, what have you, to help you make a bunch more money with us.
Awesome. Thank you so much.
Appreciate it.
Thank you, guys.
Thanks, guys.
Have a great day.
Thanks again, guys.
Thanks for putting this together, guys. Appreciate it.
Yeah, thanks for
You too,
being on,
Marcus.
Marcus.
All righty. We'll talk to you later. You have a great
too.
day.
See ya.
You too. See ya.
Bye-bye.